Hey everyone, welcome back to Corporate Decoder, the place where we decode the cryptic language of business reports to uncover the real story behind the numbers. Today we are diving into a filing from the Carlyle Credit Income Fund, and let's just say this report has some interesting nuggets about their share values. Alright, let's get straight to the point of this filing. It's an update from the Carlyle Credit Income Fund, or CCAF as you'll often see it referred to. Now, this isn't a massive, sprawling report with a whole lot of new strategies or a major shakeup that you might see in other filings. This one is more of a specific update, and what has really captured our attention are the details about their share values as of late 2025. So, what we've got here is management's unaudited net asset value per common share as of the 30th of November 2025. This figure, $5.38, is what the company itself is stating as the value of each common share. Think of it like a snapshot of what the underlying assets of the fund are worth divided by the number of common shares. It's a key indicator for investors looking at the fund's performance and its intrinsic value. This section is talking about their common stock. They have reported this value for common stock specifically, while the exact share count isn't detailed here in this specific excerpt. Knowing this net asset value per share is crucial. It helps investors gauge if the stock is trading at a premium or a discount to its underlying value. If the market price is significantly higher than this net asset value, it suggests the market has high expectations. If it's lower, it might signal an opportunity, or that the market has concerns not reflected in the net asset value itself. Now, you also see a mention of preferred stock, specifically non-redeemable preferred stock. This is another class of shares that companies can issue with non-redeemable preferred stock. As the name suggests, the company doesn't have an obligation to buy back these shares from the investors. They typically offer a set dividend, and their value can be influenced by interest rates and the company's ability to pay those dividends consistently. The reported values here are also tied to the net asset value calculation. The fund trades under the ticker CF on the New York Stock Exchange, and this net asset value is essentially the fund's reported worth per share. It's important to remember that this is an unaudited figure. Unaudited means it has not yet gone through a formal audit by an independent accounting firm, so it's a preliminary look at the valuation. Audited financials usually come later, providing a more confirmed picture. They also have preferred shares trading under the ticker CCID, also on the New York Stock Exchange. The net asset value per share is a critical factor for both common and preferred shareholders, as it represents the actual underlying value of their investment in the fund. Deviations between market price and net asset value can signal potential buying or selling opportunities depending on the investor's strategy. Now, let's zoom out and look at what this all means. For Carlyle Credit Income Fund, providing regular updates on their net asset value is standard practice. It is how they communicate the underlying financial health and value of the fund to their investors. This particular report, coming in December 2025, is giving us a look at the fund's standing as the year winds down. The fact that they are reporting these figures signifies a commitment to transparency with their shareholders. In terms of strategy, companies like this, which are essentially investment funds, aim to generate income and capital appreciation for their investors through their investments. The net asset value per share is a direct reflection of how well they are doing in managing their investment portfolio. So, a $5.38 net asset value per common share suggests that, based on their November holdings, this is the calculated value. Are there any major red flags here? Well, not in this specific update. This Form 8K is typically for material events. In this case, the other events section is being used to report this net asset value. It is not announcing a merger, a significant change in leadership. It's more of a routine, yet important financial disclosure. As investors, we always want to see if this net asset value is trending upwards, stable, or declining over time. Without historical data presented directly in this snippet, we'd need to look at previous filings for the full picture. But this number gives us a benchmark for that late 2025 period. What's interesting to consider is how this net asset value might compare to the market price of CCFF. If the market price is consistently above the net asset value, it implies strong investor confidence and a demand for the fund's shares, perhaps due to its dividend yield or perceived stability. Conversely, if the market price trades below the net asset value, it could indicate that investors are more cautious or that there are external factors impacting the fund's valuation beyond just its underlying assets at that moment. Looking at the broader picture, the Carlyle Credit Income Fund operates in a complex financial environment. Interest rate changes, market volatility, and the performance of the underlying credit instruments all play a significant role in determining its net asset value. For investors, keeping an eye on this metric alongside other financial data from the fund is essential for making informed decisions. This update provides a concrete data point for their portfolio assessment as of late 2025. So, to wrap it all up, this filing from Carlyle Credit Income Fund is a straightforward but important financial update. It tells us that as of the 30th of November 2025, the fund's common shares were valued by management at $5.38 each, with preferred shares also being a component of the fund's capital structure. It is a glimpse into the fund's valuation, and for savvy investors, it's a piece of the puzzle needed to understand the fund's performance and potential. Now, looking at these results more broadly, Carlyle Credit Income Fund's disclosed net asset value. Here gives us a clear picture of its valuation at a specific point in time. The strength here is the straightforward reporting of this key metric, offering transparency to investors. A potential weakness for a casual observer is that without comparative historical data right here, it is hard to immediately assess growth or decline. However, this is a snapshot, and it is the kind of data that, when tracked over time, reveals the real story of an investment fund's success or struggles. The biggest opportunity for investors is to use this net asset value as a benchmark. If the market price of CCIF is significantly different from $5.38, it warrants further investigation into why. Is the market overly optimistic? Or is it too pessimistic about the fund's future prospects? The notable risks for any fund like this include market downturns, credit defaults in their investment portfolio, and changes in interest rate environments, all of which can directly impact that net asset value. This report doesn't detail those risks, but rather reports a consequence of them. This filing serves as a punctual update on the Carlyle Credit Income Fund's valuation. It is a simple yet vital piece of information for anyone invested or considering investing in the fund, highlighting the importance of consistent financial reporting. Alright, that is our breakdown of the Carlyle Credit Income Fund's latest filing. What is your take on these net asset value figures and what they might signal for the fund's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and please subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community, linked in the description below, where we discuss these topics further. Thanks for watching, and we'll see you in the next video.